What's up, everyone? This is Warren Howe. Hope you're having a great day out there, as always. Now, welcome to another video. Yep, for the week. So, basically, we want to talk about today. I want to talk about a website called Finviz. Now, I'm not sure if you guys are using Finviz. I've been using this. I've been mentioning quite a lot in our lives. In the private group Discord, and this is one of the useful tools that I personally use to actually track down what is the market cap performance, right? So when you go to finviz.com, you can actually go, you go to groups, you'll actually land up here, you'll actually find out the sector industry performance. Going back to sector first and going to market cap, we can actually see the performance in 1 day, 1 week, 1 month, 3 month relative performance, and half year, 1 year, year to date. You can actually see how crazy it is. And the reason why I use this, and I think I mentioned it before in one of the lives, is that I want to find out how I should be hedging. Where's the money flow, right? Where's the money flow going to be? How am I hedging my portfolio? But I also reserve my 30% into, either momentum plays, trading, shorter term plays, right? So when I look at this, I can see money flow going, actually market cap actually appreciating more in this environment, more to, I'm surprised, like 1 day basic materials, but what I'm not surprised is more on, financials, energy, utilities. So 1 week performance, and this sell-off has been selling off crazily since the past 2 weeks, right? So 1 week you got consumer defensive. That means that money, hedge funds, big money is actually more defensive right now onto consumer staples. We can see utilities. So these are actually, to be frank, these are type of stocks that we want to buy during a huge crash. But now seeing this is definitely not a crash. I mean, S&P 500 is higher than ever because, is this sentiment that, 5 companies, big tech, is actually carrying the whole S&P again, right? Because this is what they did in 2020. Is this case happening right now? And I think, they're actually carrying 40 to 50% right now. So this is a little dangerous in the market. But when I see this, I'm like, okay, it's a good reason. I mean, when everyone's freaking out, even during the crash, owning consumer staple will get you a 20% return rather than having a negative, 15%, depending on what stock, right? So consumer defensive, utilities, healthcare, basic materials, these are going up in 1 week. And the ones that are beaten down are more to, obviously, industrials, technology, getting huge beaten down, consumer cyclicals. So this gives us a picture of how money is flowing, how the sectors are actually getting rotating right now. Now, obviously, what goes down must come up, right? What goes up must come down. And that's why there are cycles. That's why there are, rotation. Now, again, I'm not forcing you guys to be heavily buying on utilities, heavily buying on healthcare, heavily buying on consumer defensive right now. I'm just saying that I use this tool as a indication for my 30% hedge, right? So 1 month performance, we got utilities, consumer defensive, basic materials. Now, do I want to own a utility company? Not really. Do I have some stocks identified for consumer defensive? Yes, I have, in terms of just short-term trades and just be hedging my portfolios. But this will give a better, we should understand sector rotation so that we know, even during a good time where economy is recovering, what are the type of sectors that will be benefiting, what are the type of industries, and what are the type of stocks that we should be in. Now, again, I've been saying, right, we should always be in a position of power, how to hedge our portfolios. What should we buy? If you're too tech heavy, maybe we should allocate some, on consumer staples, right? On some value plays. I recently just ended, an hour ago, I ended a group coaching session where we talked about portfolio management and allocation. We were talking about portfolio blueprint. I mentioned this during our lives before. This is what we should be mindful of at this time, right? So other than market cap, let's check out, price to earnings. Price to earnings actually is the same. Consumer defensive, utilities, healthcare. Okay. How about forward price to earnings? Okay. Sorry, these are the ads coming up. Let's talk about market cap and let's look at industry right now. And you can see one day silver, gold. Now I didn't have my hands on these, but I do have some commodity play related stocks in Malaysia. So that's what I'm actually hedging my portfolio as, right? So I use that as a hedge for commodity plays because I look at price laggards. I look at seriously when material prices are actually going up, raw materials, I would expect better earnings, right? Relative to how much they've been earning last year when the commodity prices are low. So this is my hedge. I look at value play, I look at stock price laggards. This is my way of hedging. So this, Finviz is actually good because it breaks down. And these are all in US, by the way, not in any part of the world. This is just the US. So you can actually take advantage of this. So we got 1 week, utilities as well, insurance, packaged foods, tobacco, packaged foods. Okay. Steel, gold. So I'm trying to look at consumer lending in a way, consumers credit services, right? Credit services because I'm investing in SoFi heavily. So yeah, credit services. Okay, copper. What are the ones that are doing bad, right? Semiconductors are doing bad because overall tech is doing bad. Textile manufacturing, auto manufacturers. Okay, so these are gambling is the worst. Solar, right? Electronic gaming and multimedia. So 1 month, this will give a good gauge. I mean, we can actually track down what industries we're investing in or what we think we'll be doing, like either through a social arbitrage play or, in the coming months, what is going to rotate back again. This might last. Stock prices always, factors in something fast, right? Something that will happen that is expected to happen next year in terms of the economy might be reflected in straight away right now. So, but then again, I use this tool as part of my 30% because I want to be rotating and I want to be constantly in the market, right? That's the point to have. So I hope you got some value out of this today. Use Finviz as a tool just to indicate, okay, how are the groups having, what is money flow, how is the market doing right now, and yeah, be mindful of your portfolios, right, and your portfolio blueprint. Yep. I'll see you guys in the next video. Thanks, guys.